All right, traders, welcome to the Daily Edge. We're going to give some time, maybe 5 minutes, to other traders to join us. And yeah, we're going to have a good conversation about what has happened with the U.S. and China trade war, what has happened in the G7 summit, um, and yeah, we had the U.S. core durable goods orders month over month for July in the United States coming out of the U.S. All right, so yeah, let's give everybody some time to join us, and I will be right back. I'm gonna leave you with some lofi. All right, traders, I am back. I am back. So let's start this. Just let me join the chat because if you have any questions, of course, that you just write them on the chat, and I'll be I will answer them soon as I get to them. All right. So what we're going to be doing right now is we're going to go through the hello, David. We're going to go through the well, the actual my news terminal right here. this news terminal is provided by Redbox. Great news terminal to the second news. So basically, we had the U.S. Core durable orders. If you look at the top left of your screen, U.S. core durable orders month over month. On July, the actual was minus 0.4% versus 1% and a previous of 0%. U.S. core durable orders month over month on July. No, this is the U.S. durable goods orders, not the core durable. It's 2.1% versus 1.9%. And an estimate of 1.0%. So basically, good numbers coming out of the U.S. And you can see that we have some big bullish momentum going on the U.S. dollar, and we're going to get to that in just a minute. So, but before we do that, let's continue because the G7 is going on right now, and we are going to. Well, to have a look at what has happened now. Trump started tweeting very early today, saying that there were the U.S. and China had been having good conversations on trade war. I'm sorry, on the trade war. But apparently he was lying again. Trump says if we don't make a deal with China, U.S. companies should leave. He can't order the U.S. companies to look to look outside China. Let's see. This is what I wanted to show you. Okay, Trump says we haven't been happy with the WTO. I'm sorry, but we're getting treated better in the WTO now, and we appreciate that. But here is what I want to show you. Global Times issue. Based on what I know, Chinese and U.S. top negotiators didn't hold phone talks in recent days. The two sides have been keeping contact at technical level. It doesn't have significance that President Trump. It doesn't have the significance that President Trump suggested. China didn't change its positions, and China won't cave to U.S. pressure. So again, U.S. President Trump was lying about the U.S. negotiation efforts on trade talks. So that's about it on economic news and on global news. So why don't we jump into the charts? All right, let's start with the U.S. dollar. Now, if you are a Daily Edge subscriber, and you want to get notified every time I go live, just hit the subscription button on this channel, and you are going to be notified every time I go live. So basically, we're going to start by looking at the U.S. dollar currency index. Some key levels on the U.S. dollar currency index right here. We explained this on the weekly market breakdown on Sunday. The weekly market breakdown is a video that I make going through the major currency pairs and the major markets on Sundays before the trading week, so you guys can get key levels or my key levels and the levels that I'm looking out at and the levels that I'm going to be playing that week. So basically, we had a terrible Friday for the U.S. dollars with with China imposing tariffs on 75 billion on U.S. goods and on U.S. autos, and the U.S. increasing and further escalating this trade war with China by ramping their tariffs to 30% and from 25 to 10% from 5% on some other U.S. Imports. Everything crashed. The U.S. dollar crashed. The Dow crashed. The S&P crashed. And we closed. Here's what's very interesting about the U.S. dollar. we closed at exactly at the 97.26 level. So basically on Friday, from the high on Friday to the low on Friday, we had a move of minus 1.30 on the US dollar, on the US dollar currency index. All right, and we opened, and we closed at 97.26. What's interesting here is that during the weekend, I mean, the market was closed, obviously, but we had a very meaningful gap to the upside, meaning that, well, we closed at the 97.26 level, and we opened at the 97.50, 57 level, right? That is about a 0.31% gap to the upside, which is meaningful given the strength of the move to the downside, or the bearish move on Friday. So basically, we had this crash on Friday, but we opened right here on Sunday. All right. Now the US dollar is testing the 98 level. 98 level is very meaningful for us because it has been a previous base. And not only because it has been a previous base, but it's where buyers were found and the level that buyers were protecting before news hit the wires on new tariffs on Friday. So very interesting level that we are trading at on the US dollar currency index. And in my opinion, if well, sellers are going to be positioned right here. And you can see by how this 4-hour candle is printing right now that there's meaningful rejection at that level. So what I'm thinking, because of the strength to the move to the downside, is that we might be testing this level to go down again. Okay, so this is the US dollar currency index, and if let me just zoom out a little bit. If well, if we are going to be playing this, well, of course we're going to be playing the US dollar because when you trade forex, you have to play the US dollar. And because we are going to be playing the USD, we if the US dollar currency index keeps trading uh, below this level right here, then we are going to be playing shorts on the US dollar. Okay, we're going to play shorts on the USD, choosing from a number of instruments that I'm going to go through in just a little bit. But this is the my view on the US dollar. And unless we have some bullishness, it's going to be very difficult for bulls to move above the 98 for a continuation higher. All right. So let's continue. If you have any questions, again, just type them on your chart. I will be more than happy to answer them um, when I get to them. So the US dollar currency index, that was the USD, right? So let's start with the euro versus the US dollar, shall we? The euro versus the US dollar, very interesting indeed. Again, because of the move down on the US dollar, we had a big move up on the euro versus the USD, and this is why it's so important to look for key levels when trading. Well, when trading basically anything, it's all about the levels and it's about what drives the market. And in this case, what's driving the market is the US dollar, right? Or at least the markets that we are looking at, or the markets that we trade. What drives them is the US dollar. So we need to look for key levels, and we need to be consistent in our trading with the direction of what is driving the market. Okay, in this case, it's the US dollar and the US dollar crashing, and that means that the euro versus the US dollar is going to be appreciating. Why? Because when the US dollar depreciates, the euro appreciates versus the US dollar, meaning that we are going to look for buys in the euro versus the USD. Now, When looking for key levels last week, we were looking at this one right here, which is the 11160. Noted on the weekly market breakdown again. And as you can see right here, we had the test of the level and the move to the downside that we anticipated. What we anticipated on the weekly market breakdown, and this is why it's important for you to join us and to subscribe to the channel, is this: we were looking where price open around these levels at the point of control, and we were looking at the possibility of a buy position, or I'm sorry, of a buy here on the euro versus the USD. And our level was the 111, right? That level that buyers had such a had such a hard time breaking above because of all the sellers that were found protecting it. When the US dollar crashed, well, we had that big break above that level, and now we were looking for a retest of the level before pushing higher. We didn't quite get to our level, so we didn't get an entry on the euro versus the USD. But as you can see, these moves that we anticipated were spot on, meaning that because right now the US dollar, or well, the US dollar currency index is testing the 98 level that we just saw. For a continuation lower, we are going to be expecting a rally on the euro versus the USD. And again, we are going to be looking at the 1116 and that point of control, this entire level right here, for sellers to jump in. And it's going to be quite difficult for buyers to break above that level. But because, if they do, what we are going to be looking for is a possibility of a buy on a retest, okay? And that is basically what we are waiting for on the euro versus the USD. Again, we didn't quite get to our buy zone, and you have to be consistent in your trading, okay? If you want to make money in the long term, you need to be consistent, and you need to follow your rules, and you need, you need to follow them like, just repeat them to yourself like a mantra, okay? And you need to be disciplined. The euro versus the US dollar didn't hit my buy zone, so I did not get in. Yes, sometimes that is going to happen. Sometimes you're going to miss moves like this one. But it's okay. It's okay. Because for me, there was no setup to buy the euro versus the US dollar. But again, what we were expecting that happened. A dip to a power zone for a possible rally to test the highs at around the 112.40 level. Okay, so that's the euro versus the USD. Again, if you have any questions, just ask them on the chat. I'm more than happy to answer them. Right? Let's continue. Let's move on and let's go through gold. Yes, let's have a look at gold. All right, a lot of lines going on here, I know, but that's fine. Just let me get rid of some of these Fibonacci retracement levels, just to have a cleaner chart for you. And let's go to a 4-hour chart. 1-hour chart is just too short term. All right. So big move to the upside on Friday. This move right here, because of because of the crash on the US dollar, and we had a power open on Sunday. This move right here, the last move to the 1550 to 1557 level was the move on Friday. Now, if you look closely, we have the 161.8% retracement. This is the 161% retracement of the triangle formation, meaning that it is the 161.8 or 161.8 0.8% retracement of this move right here. So big bullish targets going on right now. On Friday. But our ultimate targets to the upside are the 1570 level and that 223% retracement of the flag. Okay. Now we have what has happened here is that let me go back. We retraced 161%, and now we have retraced 50% of the last move up, maybe for a continuation higher. Okay, now let me just put on some Fibonacci retracement levels on this right here. So again, that's a clean 50% retracement of the last leg up of that powerful move to the upside. You can see it right here. That's a 50% retracement right at the previous highs and right at a power zone. I don't have any volume profiles on my chart, so why don't we see if we have or where are the high volume zones. Again, the high volume zones were on the lows, and you can see right here that this is the zone that buyers were having trouble breaking with, but eventually did on that spike high on the US dollar crash. Again, if you want the exact trade levels, or if you want my exact trade ideas, just join. I'm sorry, my streaming software just went offline for a bit, but I'm back again, and let's move on. All right, let's move on. Again, I'm looking for a continuation on gold. Looking for a continuation higher. Again, we just we trace 50%. Our ultimate targets are at the 1570 level. Let's move on. Again, if you have any questions, just write them on the chat. I look at the chat all the time, and I will eventually go through your questions. Okay. Now let's move on and let's have a look at the US dollar Japanese yen. Now the US dollar Japanese yen. Well, what can I say about the USD Japanese yen? It's quite simple. Power level right here at the 104.65. Let me just change the coordinates to the correct ones. And I'm going to show you, let's go to the daily chart, okay? Now, this is why it is a power level. It's the low, this is the low of the crash. And this is where buyers were found. And you can see, I mean, just look at this daily candle. Super bullish in my eyes. In fact, from low to high, we have a 200 pip move today. That's insane, right? We've had a 200 pip move and a 1.81% move to the upside. But that is from low to high, all right? We are just up 0.68% on the US dollar Japanese yen. Let's go back to the 4-hour chart, and I'm going to show you what I'm looking at. Okay, this is quite tricky. This is a quite tricky one because of this power move to the upside. Okay, now I am not looking for anything specifically here, but we are going to look at some levels. Okay, now again, I'm going to use the green one because the green, when I use red levels, it means big historic levels. Green ones are just immediate levels of support or resistance. So basically, we just retraced back. I think it's about a 76.4 to the dot. 76.4% of the last move to a previous base. All right, this is the previous base that we have retraced to, but eventually, but I'm really not looking for anything in particular on this currency pair. Just to point it out the 106.20 level, which is a power level on the US dollar Japanese yen. Nothing interesting in my eyes. Maybe if you have something interesting, you can share it with us. Um, but again, because of the US dollar being or being capped to the upside at the 98 level, I could consider a short position on the US dollar Japanese yen. But it's not appealing. It's not within my rules. I'm just pointing out some key levels right here on this market. Let's move on. If you have any questions again, just point them out in the chat and I will go through them. Let's go through the GBP USD. Now, the pound versus the US dollar, very interesting move on the pound versus the US dollar. As you can see, we are moving higher. Again, this was a big level that buyers were having trouble breaking above. You can see that was very heavily protected by sellers. Okay, was a very high volume zone also. But with the crash of the US dollar, we moved to the upside. And again, we are moving very slowly to the upside. You can see that we are making higher highs, higher lows, higher highs, higher lows. And if we continue this path, we are never going to get to that 24 level right here. To test it again. And right now, to me, it would be interesting if we could get back down to the 2180 level. If we get back down to the 2180 level, I will definitely be, or I would definitely consider a long position because of this. Let me just put on some fibs because this will be interesting. And again, I'm going to tell you something. This fib, I'm going to be deleting immediately. Why? Because this fib is drawn considering that the last high is the last high is the high of the move. All right. Now, this Fibonacci retracement or this 50% retracement is considering this to be the last high of the move, which we cannot know because we can actually make a new high before going lower. But if in fact this is the last high of the move, then I would be a buyer at the 2180. Why? Because this is a very thick area, high volume zone. Right there, we have the point of control of the volume of the entire move to the upside, downside. I'm sorry, and we have a previous, a previous guarded level by sellers. So, in my eyes, I will be a buyer right here for a test of that 24 level. Again, I'm not very, not very happy about that because of, just because of the, of how slow this market is being, and because of Brexit right now. Remember that we do well, even though Boris Johnson is at the G7 summit, we do have Brexit. We could have Brexit news coming out. Remember that Boris Johnson is a hardcore Brexiteer that will move the UK out of the EU by October 31st. So this is a very unstable market, and I'm not very I don't like trading in stable markets that don't move. Okay, if I'm going to be taking an above average risk, I need an above average reward, and that is not my jam. All right, let's move on. Let's move on. Let's have a look at I don't know if you want me to look at something. I most definitely will. Just point it out on the chat, guys. Again, if you want my entry levels, stop losses, targets, I share my trade ideas with my premium members. and I'm leaving you a a link below where you can subscribe with a 25% discount. That's only $25 for the first month for you to try us out. That is absolutely nothing. Just stay in for one evening and don't dine out. You can afford that for for you to really test us out. Okay, so let's continue. Let's talk about the US dollar versus the Swiss franc. Again, key levels working for us. After the drop to the downside, we were looking at that 97.10 level, which worked to the pip, and we were expecting a move to the previous broken base at the 98.14 level right here, which confluences with I'm sorry about that, which confluences with the 50% retracement of the entire move to the downside. Okay. Again, that fib was broken, so it must not be on my chart. The fib that I'm going to be drawing is this one right here. And I do think that we hit the 61.8% retracement. So basically, the US dollar Swiss franc crashed. Crashed on, let me change the color to white because I can hardly differentiate from the background. So the US dollar versus the Swiss franc crashed on Friday due to trade war escalations between the US and I'm sorry about that, between the US and China. And we have retraced back to the 61.8%, to the 0.618 level right here. And we have retraced to a previous base. Very important level that we are working off. And as you can see, this is why it's important to focus on key levels when you're trading, and not only when you're trading forex, but when you're trading any instrument, because if you start trading off the middle of the chart, for example, if you're starting to look for longs at this level right here or shorts at this level right here, why are you going to burn your account down? Guys, it's important for you to understand that working with key levels is what's going to make you profitable in the long term. And if you want my key levels every day before these moves happen, well, just subscribe to our premium community with the link below. Only 25 bucks for the first month. Let's move on. And we're going to move on to continue to talk about the US dollar versus the Swiss franc. And the US dollar versus the Swiss franc. We're going to be putting on a couple of volume profiles, and I'm going to tell you right now just why. The first one is the volume that profile is going to be calculating this entire move. All right. Oh, well, I'm sorry about it's going to be calculating the volume from this point on to the chart. And now what I want to do is put on a volume profile that is going to be calculating the volume just of this drop. Okay. Now you can do anything with volume profiles or volume analysis actually, and let's move on. And right here, you can see that the high volume is, well, it's the same that just a little bit higher as the volume on the upside. Again, I didn't, this is the first time that I've done this. I'm doing this with you guys. And what I want to do, or well, what I wanted to justify is a bearishness on this chart based on a break below the 97.40. So to me, there was a sell opportunity here, but that sell opportunity is long gone. Again, if you want this live, just click on the link below this video, guys. And what I'm looking at the possibility is a continuation lower. And if we actually break with the 97.40 level and we manage to break with the previous lows, then I will be looking for a continuation lower on the US dollar versus the Swiss franc. Now let's move on to another market, and let's have a look at the E-mini S&P 500. Okay, so this is the E-mini S&P 500. Let me just delete this. I was making some videos about how steep the drops to the downside were. Okay, so basically, this is what I want to show you guys. This was our key level on the E-mini S&P 500. Now, if you trade futures, well, you would have profited a lot from my key levels, because just take a look at this. Now, let's go through my thought process on this market. If you look closely, this is the level where we first found sellers here, then again here, and then again here. So basically, we were looking at a short possibility on the E-mini S&P 500 right here, because we are trapped inside of a range. Now, this is the low of the range. Let me just draw it correctly. I mean, it doesn't take any effort at all. This is the range that we are working with the E-mini S&P 500. We're looking at buyers here, and of course, we are looking at buyers here. Now, because of trade talks with China, okay, because of trade talks with China on last Friday, the equities markets crashed. Okay, you can see the crash right here, and well, we closed at this level, at the around the 28.52 level, and we opened below our key level, which is the 23.50. Remember that the level is basically a zone. It's not an exact level. And when we saw, no, actually we opened at 28.31. I'm sorry. Yeah, this is exactly what I wanted to tell you. We opened at the 28.31 level. Then sellers took price down to the 28.11, and this is where buyers started to jump in. And now we have retraced, I think, about 50% of the move. No, 61.8% of the move, if you look closely right here, to a to a key level, which is the 28.90 level. Now, in my eyes, there is no opportunity just yet, but let's put on some volume profiles right on this chart. Let's calculate the volume on the drop. Again, you can imagine that the thick volume is going to be right here, just because this drop was so steep, and the move to the upside was so strong. And just by looking at the chart and by looking at the candles, you can see that this area of price choppiness, if you will, is where we are going to be finding the high volume trader today. But what I'm looking at is a possibility of a continuation to the downside. So where am I going to try to look for an opportunity? And again, it's at that 28.90 level. We did quite get there. I mean, we got there, and let me just thicken this chart out for you guys. We got there, and you can see that well, sellers push price down. So if you're looking to sell the E-mini S&P 500 by looking at the 1 hour chart, in my opinion, that opportunity is long gone. Yeah, because I mean, we are down from the high of the move till the point of control, 61 point. We are down 0.61% or 71 or 70 ticks. And yep, the move is long gone, guys. So if you're looking for a short opportunity, like I am, or like I was, you better wait for a retest of this level, maybe for a continuation lower. So right now, not too much going on, but just waiting for maybe a retest for a continuation lower. Again, if the move to the upside is strong, you should start looking at these kinds of candles. Just don't short this market because you're going to get trapped in a bear trap, and the move could easily be a continuation higher. So uh, stay patient, look for clues in price action, and if we move above that 28.90, maybe look for long opportunities, which will give you a much better high risk to reward ratio with a high probability trade than to look for a short if we start to look if you start looking at spikes above that level. Now let's move on. Let's have a look at Bitcoin. Again, let's have a look at Bitcoin. Where is Bitcoin? Here is Bitcoin. We normally, well, this is my Bitcoin chart, uh, and well, on the yesterday's weekly market breakdown, we were looking at this, and what has happened is exactly what we were looking at. We were looking at well, non-direction around the point of control. Okay, there's no direction, and again, if you're looking, I mean, if you're buying Bitcoin at this level, maybe you have a lower time frame, uh, a lower time frame analysis than me. But basically, this is non-directionally to me, and again, I'm still waiting for the 93.80 level. Okay, I'm waiting for some bearishness to get to this level for a continuation higher. This is my buy spot. I'm not going to be touching Bitcoin or buying or selling Bitcoin uh, until we hit this level. And again, I'm not going to be selling Bitcoin. I'm not a Bitcoin seller. I'm seeing too much bullish pressure around these levels to even consider a sell. And again, well, just look how bullish these levels look. Boom. Right here we have one, we have two, we have three very bullish levels. So I'm going to be looking to a for a test of this level, some reaction, and then a possible buy. But nothing has happened in this market just yet. So I remain patient, and I'm going to be putting on an alert actually at this level because I don't have one. Alert, boom. So it's going to alert me when we hit that level. Okay. Now let's have a look at crude oil. Wow, this is a horrible chart. This chart dates back from the day. So I'm going to be removing all drawings from this chart, and let's have a look at what has happened. Okay. So basically, right now, actually, let's just look at some key levels in this market. Again, well, this is WTI. These are the CFDs on crude oil. This is not the futures contract that I'm looking at. So the levels might differ might differ from your charts by a few ticks, but it's basically the same if you're looking at the highs and the lows that I'm looking at. Okay, so again, the level that I would be looking for a buy opportunity in this market is this one right here, is the zone between the 51.65 to 51.10 in my chart. Again, might differ from yours by a few ticks because these are CFDs on crude, not the futures contract, but that is completely fine. Just look at the highs and the lows that I'm looking at, and you're going to get the same levels that I'm working with. Actually, it's not the I much rather work with this low right here, the 51, exactly 51 level. All right. So while we're working with 65 tick zone, a 55 tick buy zone, this one right here, and this is the well, the level that I would be looking for a possible buy. Okay, Now let's look at some volumes. Right here, visible range. This is the volume of the entire chart. Okay, so well, uh, let me just show you something. Not only I would be a buyer if we hit the 51 to 51.65 level, but I would be definitely will be a seller at these highs. Okay, now let me explain to you why. All right, let's put on some Fibonacci retracement levels right about here, and this has to be around the 76.4, exactly the 76.4. Put it on white. So look at this. This is very interesting. And this is why I love doing this, because sometimes I just miss markets. And when I'm doing this with you, I realize that there's going to be some key opportunities. Okay. Now, I'm actually not going to be drawing this line. Now, let me explain to you what I'm looking at. I'm looking about at this level because we've had sellers jump in twice already. Not only that, but it's a key Fibonacci retracement level. Not only that, but it's a key volume zone. So let me explain to you. Right here, historic volume, buyers coming in and jumping in. Look at how choppy this part of the chart is. Sellers and buyers struggling to take control of the market. Okay, this is what a choppy price action means when there's high volume. Okay, now this is important. When there's high volume, when there is choppiness, this is what it means. There's buyers and sellers jumping in. Buyers took control. Sellers well, buyers took control when we price broke to the upside, and then sellers well, really took control of the market and crash price to a lows at the 51 level. But take a look at this. Price crashed, but it retested the broken high volume zone. And again, if we go back to this area, I am going to be looking for a possible short opportunity, right? Because this is a high probability trade with a low risk versus high reward, or a high risk to reward ratio. Okay, this is very interesting, and I'm very much liking the possibility to short this market, and not only having a buy zone right here. Now, this is what I'm looking at when I'm looking at crude oil. And we've been going for about 48 minutes right now. And there is no questions on the chat, so I'm going to be shutting this shutting this one out, guys. Again, subscribe to this channel if you want to get notified. I'm leaving you a well a 50% discount for your first month for your premium subscription if you want to get my exact levels, or my exact trade levels, entries, stop losses, and targets. You have to be a premium subscriber. I'm not going to be showing you that here, but I am giving you a 50% discount, only $25 for the first month if you want to subscribe. And take a look at gold. Gold is going nuts, and yeah, because of that 98 level. I mean, key levels, guys. Come on. Yeah, if well, I'm leaving you that there. And what else? If you want to become a daily edger and get some freebies on your mail by me, I'm leaving you a link where you can subscribe to my newsletter right below this video too. So until tomorrow, guys, I will trade safe and have a great and or have a great beginning of the week. Goodbye.